All right, so I think it's important to have a good imagination because you can come up with ideas that could be creative and then try to make these things come true. Um, but at the end of the day, I'm happy to sit here and wait and see when these things will actually happen. Because right now, it's just, a company that's losing money and shrinking. So they're going to need to do something. That's a creative idea.
Well, like I said, I think they're tossing a lot of ideas, and I don't think Ryan Cohen's asleep at the wheel here. I think he's got
Yeah, I'm sure he isn't.
he's
I'm
got
sure he isn't, but
the incentive in the world to make this work.
I'm sure.
He staked his career on it now.
Yeah, but the problem.
Worth $4.2 billion. He's not exactly, gonna go broke if he's not successful at.
I was gonna say Eddie Lampert.
I don't mean to be cliche, but I'm
Hold on. Yeah, I heard of this. I'm sorry, Ryan, to cut you off. I remember when Eddie Lampert. You guys are probably all too young for this. I hate to say that. I can't believe I'm saying that these days. I remember when Eddie Lampert took over Sears and Kmart and merged them, and it didn't end well. Eddie had an impeccable record, better than Ryan Cohen. Sometimes you just can't force a square peg in a round hole. It just is hard. The Sears Kmart thing was a disaster, but it was SHLD if you remember. It was big stock, great stock. It was 2002 if I remember correctly, or 2003 and 4. And Eddie had a great hedge fund, and you don't hear much about that anymore. I think this is going to end up like that. It's not easy to, perform a miracle. And you're paying for some of the miracle, which is the point that Ryan and I here keep making. You gotta buy something that you're not paying for the miracle, and then hope the miracle happens. That's what value investing is all about. You pay for a base business, and you get something else for free. For example, if GameStop was at 2.2 billion market cap, I would be the biggest shareholder. Why? Well, you got 2 billion in cash. The only downside is about 10%. And if anything ever good happens out of this shitty, crappy, terrible business that they have, and it's worth a billion or 2 billion, I double my money. But the worst case that happens is I lose 10%. That's a good deal. Your deal right now is the worst thing that happens is you lose 75%. And the best thing that happens is they do a turnaround and you break even. That's not a good deal. Why would I want to break even in my best case scenario? That's crazy. And Ryan is probably telling you that that's wishful thinking, that your best case scenario probably isn't even breaking even. Your best case scenario is you lose 50%. Your worst case scenario is you lose 75%. That doesn't sound like a great situation to be in. And again, I'm welcome to be corrected, but I haven't heard anything yet after hours and hours of streaming that makes sense to me.
Well, look, Martin, just to be fair, the whole situation with Kmart and with Eddie Lampert, with ESL Investments, I mean, that was a fuck up right from the get-go.
So was this. So was this.
Here's the thing. It's funny that you say you'd be the biggest shareholder of GameStop at $2 billion because they have $2 billion in cash. Of course, that's the case. In fact, that was the case in 2019.
Yeah, it was good. Listen, you keep going back in time. You keep going back in time to your great trade. I can tell you war stories all day about my great trades. We don't give a shit about your investment from a long time ago. The question is, what's GameStop going to do now? It's trading for 30. Where's it going?
Well, look, I'm going to repeat myself. I mean, being short GameStop is probably the wrong short to be making at this point. There's plenty of shorts that are much better candidates.
Listen, you said this earlier.
Yeah,
you're allowed to. No. Shut up. You're allowed to make your position, but it's not like when you say there's better shorts that you know for sure. You don't know what the market's going to bring. I think it's a good short. You don't think it's a good short? Fine. In 6 months, we'll compare notes and see who was right.
Yeah, but I mean, again, this is a valuation short for you, right?
It doesn't matter. Again, this is like stupidity. This is first level hedge fund thinking stupidity.
Listen,
it doesn't matter. It doesn't matter what quote unquote valuation short, M&M short, Dr. Dre short, Magic short, McDonald. What's the label? Who cares? It's a short. I'm betting it's going to go down. I'm either going to be right in 6 months or not. It doesn't mean, classifying the bet doesn't change the bet. I think it's a good short. We'll see in 6 months who was right.
Yeah, Martin, listen, you don't need to flex the hedge fund thing with me, dude. I've been involved, been around hedge funds all my career. Listen, I have to tell you.
Doesn't sound like it.
Listen, Martin, this is exactly my point, and this is, we've been going back and forth here. I get your position, but here's the thing. GameStop today is very much like GameStop in 2019, 2020.
Listen, we'll see what happens. I don't know. I can't tell the future.
This company is not going out of business anytime soon.
That's clear.
It doesn't make any sense. It's a valuation short.
What's wrong with a value? I'm sorry. When you short stocks, do you not care about their valuation? When you short stocks, you don't care about their valuation.
I do, but listen, when I'm shorting stocks, it's not purely from a valuation.
That's cool. I do it my own way.
Yeah, but again, I think if they were to throw something out like this, where they do a partnership with a Best Buy or a Target, that changes the playing field dramatically.
Good. We'll see what happens when it happens. Yeah. But for now, I think this.
By the way, it's interesting. When J.C. Penney did this with Sephora, okay, that for them for temporarily. I mean, they ended up going through a reorg anyway because they fucked up, but. Temporarily, it was actually a really good thing for
because it's retail. Every one of these things is going bankrupt.
And here's the other thing with the retail. And I kind of agree but disagree with you on this because when you're comparing Kmart and like the big box stores that have 150,000 square foot footprints versus like a GameStop that has a 5 to 10,000 square foot footprint, that's apples to oranges. You could put a GameStop within a Best Buy and be very profitable for both stores.
Let's see it happen. Let's see it happen.
No one's going to Best Buy. Your kids are because you're bringing them in your car to Best Buy. That's why your kids are going.
No, listen. When my kids were little, they were asked to go to the game store. They would call it the game store. Can we go to the game store?
And now they.
Like Instacart, Best Buy.
Yeah.
I mean,
Now they sit at home and get electronic delivery of the game like everybody else.
We're in the post-COVID world.
Yeah.
Hold on. Let me tell you guys.
Those days are over.
Martin, a great analogy to this whole thing, this topic of retail, is Amazon and how Amazon started with Jeff Bezos and books. Okay, Amazon literally single-handedly put bookstores out of business, like Borders, and many local bookstores and everything else. You know what's interesting now? They're bringing bookstores back. Why? Why are they bringing bookstores back when you can buy it literally?
Let me know when they go public.
People like to be in stores. People like to go to the bookstore.
Everything you're saying is cool, but where's the revenue and earnings?
And you're a book. Listen, you're a book guy. I'm a book guy. I like to go to the bookstore. I like to feel the book. I like to have my espresso. Look at the new books coming out. Flip through the pages. Look at magazines. My wife and I love going to bookstores, and I think millions of Americans.
That's a cool story.
Yeah.
Where's the revenue and earnings?
Well, it's yet to be determined whether that's that's a sustainable thing.
How long are we going to wait for that?
But here's the thing. I think this time around there'll be a lot fewer of those stores. The problem with retail largely has been just a massive build out over the last 30 years of retail, and then Amazon single-handedly over the last 20 years has really put a kibosh on margins for all these guys. All of us shop on Amazon. I can tell you. And by the way, this is impacting even stores like Lowe's and Home Depot. I just recently bought some tools on Amazon. I mean, I could have driven down to the Home Depot 5 miles from me, but why? When I could just go on Amazon and say, okay, I need these.
Look, the personal anecdotes.
Same for GameStop.
The personal anecdotes are lovely. At the end of the day, I live in the world of financial statements. They reported pre-announced Q1, $882 million in revenue. I've gone back while listening to your stories as many quarters as I can. Last 28 quarters, this is the worst revenue number for the last 28 quarters in a row, 882. People will tell you for whatever reason that that's a good thing. It is not a good thing when your company's revenue has reached record lows. Why? Because you have core costs that have to be spread across the company's footprint and business. You're descaling. Now, maybe those are really bad stores, but that's just having a really bad problem. And by fixing that problem, you still have to pay for the rest of the business, the SG&A. So the gross margin of the stores can't pay for the SG&A Lower revenue doesn't help. Store shrinkage numbers don't help. I don't know where this steady state business is profitable. Is it at 1,000 stores? Is it at 2,000 stores? Either way, this company ain't worth $8 billion. This little retailer ain't worth $8 billion. It doesn't make sense. Down 29% year-over-year revenue. Wow. What part about this is exciting? You got a bunch of cool ideas, and I'm sure Ryan's got more of them, but cool ideas and 250 gets you on the subway in New York. And, what works in the stock market is revenue and earnings. And apparently Roaring Kitty. But that won't last long, man. Roaring Kitty is fallible human like the rest of us. He's not George Soros. He's not Steve Cohen. He's not Jim Simons. Rest in peace. And even those guys don't move stocks 3x. So, following this dude is not brilliant. And again, thing about Cohen, Ryan, is that yes, can he turn $2 billion into something? Sure, but I can also give $2 billion to Mark Andreessen and Peter Thiel and hope that they make me money too. They got a lot bigger chance of doing that, by the way. And I can buy secondary shares of their funds for cash value of $2 billion. When I go buy their secondary fund, it doesn't trade at $8 billion because they're smart investors. It trades at the cash that was put in until the investments bear fruit. Nobody would pay $8 billion for the $2 billion somebody put in Mark Andreessen's fund. They would only pay $2 billion until there was $8 billion in proven value. They would pay $8 billion. Same thing here. Why pay for extra for this guy's value he hasn't proven yet? Let him prove it. The only thing he did to prove it once was this NFT marketplace. He proved that you should be cautious about his expansion ideas. Not excited. Cautious. Listen, sometimes these rich guys, by the way, that have done really well as operators, I've dealt with them my whole life, trying to put them in pharma companies. Sometimes they're washed up because they're too rich and they don't care. They got the driver, they got the summer house, they walk on water. I'm thinking of a particular guy, just gave me a headache thinking about him. Nice guy. Got a good relationship with him. Thought about making him CEO of one of my companies. He went somewhere else. That company did not do well. He did not turn it around. He did not make it successful, even though he did it 3 times already in the past. 3 big turnarounds, big wins, multi-billion each. Rich guy all of a sudden. Then, a little arrogant all of a sudden. Thought he was a big strategist. He's really a big operator. And flubbed his next companies. I gotta check out what he's doing now. These turnaround artists and these entrepreneurs, they're not always perfect for the second act. There's a lot of guys out there. They have a great first act. Second act's disappointing. There's no guarantees. Elon has had 4 great acts in a row. Beautiful, wonderful. But it does not mean that this guy's Elon. It doesn't mean the next guy who sells a company is Elon. Sometimes these guys sell a company, they lose their hunger. They lose their interest. We just don't know. All I know about this guy is he made an NFT marketplace. That's not getting me excited.
Hey, Martin, not to slip in your jet stream, but just real or thought stream, but just a couple things. Not only Eddie, but look at Ackman and Ron Johnson. He was going to come from Apple, be the great hoe.
They did that with J.C. Penney, yeah. But here's the thing, look. But here's the thing, guys.
No, hold on. You're interrupting him. He literally said he wanted to go on a little thing, and you're just telling him that no, I need to talk. Let Ryan talk. Ryan. Sorry, I muted everyone, so you can.
I'm sorry. I just turned around a large roll up that took 3 years, and what I was going to say was sometimes $2 billion with a blank sheet of paper is easier than $2 billion in an existing business, because the existing business constrains thinking. There's institutional inertia, change management. Sometimes it makes it harder. So, Martin, to your point, if you could give $2 billion to smart people with a clear runway as opposed to
Ryan, that's nonsense. Right. Martin's idea. Hold on a second. Martin's idea of giving it to some, VCs because they can manage it better. Look, venture capital investments are notoriously opaque. So none of them are marked to market. Okay, very rarely do they have a fucking Amazon win or an Apple win or any win for that matter. Most of their investments go to shit. So
well, same shit here. That's the point.
He can make you money. My point is that I think it's a non-starter to even make that argument. This is an operating business. Ryan's got a huge stake in it. and I think he's, they're going to figure this thing out.
Well, what do you think
So
Peter Thiel does? What do you think Peter Thiel does? People give Thiel $2 billion to make money with it. By the way, he's never lost.
How many investments has Peter made that have gone to shit?
Well, when you buy a fund, you don't, buy for you buy for the general return. He's done very well. It's very hard to get into his funds, and the point is that it's hard to turn $2 billion to $8 billion. A lot of people are trying to do that. People with no restrictions whatsoever. To Ryan's point, and I think that nobody pays for a secondary. Sometimes you need to get out of these funds. You sell them to somebody else. Let's say you bought into Thiel's fund on January 1st, and some emergency happened. You need to sell the fund, and you put $2 billion in the fund for argument's sake. You don't sell it for $10 billion because it's Peter Thiel and he's a fancy guy that's made a lot of money. He's a genius. You sell it for $2 billion, right? You don't mark it up to $10 billion saying, well, Peter's going to make a bunch of money this time. Well, maybe he will. He's done it the last 8 times, but you don't know if Founders Funds 4 is going to be worth $10 billion in the end. You just don't know. So anybody who would buy that, in fact, more likely would actually trade at a discount to that $2 billion. And so, the market's leading us to believe we should pay $10 billion for Ryan Cohen's unproven ability to turn $2 billion into something else. I'll wait, thank you very much, until he actually does turn it into something else, especially after seeing the NFT debacle. It's kind of like, why am I excited about this guy? What has he done last? NFTs. Didn't work. Didn't take much to see it wasn't going to work. And again, nobody gets credit for a new business idea, which are notoriously hard to do, as you said, as we saw with the NFTs. Very hard to start new businesses. Every business in America, Coca-Cola, Procter & Gamble, every pharmaceutical company, every software company, we all want new businesses because our old businesses aren't growing anymore, and we want new products and new ideas. And we've got tons of guys working on them, and they just don't grow on trees. They're hard to do. And then you've got, like I said, the VC community. That's their job, to start new businesses and fund them and make them happen. And it's a hard job, to your point. Peter Thiel is one of a kind. There's not many Peter Thiels out there. Most of the VCs are not that. Most of them lose money. And, like I said, I'm not willing to give credit for even Thiel's or Andreessen's touch because I don't know if that fund is going to perform. Sequoia's funds did great, and then a couple of their funds didn't do so great. And that's why nobody's willing to pay for results that haven't happened yet. Maybe they'll pay for Elon. But in a publicly traded company, you're paying an awful lot. And if it doesn't come true, you're paying a big price. That's why at $2 billion, I'm a lot more confident in GameStop than $10 billion.
Look, what I was going to say, Martin, real quick, I got cut off, was...
You're getting cut off because you want to talk over everybody.
Yeah, he is the quickest.
Martin, I just wanted to say thanks. Good conversation. I think you changed my mind. Big fan. Listened to you for a long time, so thanks for taking out time
Thanks,
to talk
sir.
to everybody.
Anytime.
Also, I
You'll
don't
buy
know how
some
you,
cake too, bro. For that
I
GM.
don't know how. Will do. I also don't know how you deal with some of these people.
Patience.
They're crazy. Just listen to them.
You should have seen prison. People would come to my cell and ask me for stock tips, and I just exhale deeply and spend hours doing this. I've learned.
That's awesome. I hope you gave some terrible advice.
No.
Later, man.
Martin,
Thank
I
you.
used to go to your video streams back in the day. Forgot even what platform you were on. I think this was before your trial or something.
Yeah. YouTube.
Look, going back to Ryan Cohen, I think, you have to remember he started a business from scratch, took it IPO, became a wonderful business that was sold. So look, the reality is he is.
But he was also selling relevant products, right? You wouldn't take care of your pets. That's a built-in market.
But it's not like he's coming from a different industry. He's coming from a retail operator background, which is what he's doing now. So not giving him any credit, I think, is very disingenuous.
Well, why would he get credit? Why, it's like I'm buying
He's
up.
got more experience.
Well, hold on. All these people. All these PIE. Wait. He's got more experience than what?
He's got more experience than you or I managing a retail business than you or I.
A retail business, sure. Yeah, I'm not in retail. The point is though that if you're saying buying GameStop is like what? Why is anybody interrupted? Why would anybody interrupt me mid-sentence? Why the fuck would anybody do that? Extremely rude. If buying GameStop stock is like a SPAC where we're giving Ryan Cohen $2 billion, it should trade at $2 billion. Right? That's it. We value the money at its book value. We value the stores at the value of the stores. That's it. What are the stores worth? $1 billion? $2 billion? They're not based on anything on cash flow, but of course they have to be worth something. They have to be worth cash flow at some point. And that cash flow would have to come from some strategic position they have that's not really clear, that somehow they can transform it into cash. Maybe they just turn into a collectibles company really, really skinny down, and that collectible business secretly is throwing off $100 million in cash. They just have to get really, really small. Okay. So maybe the stores are worth $1 billion, maybe $2 billion, fine. But the cash is only worth $2 billion, right? The guy could be the best investor literally ever, like Peter or Mark or Steve Cohen. But you can buy shares in those guys' funds, and they're not asking you for a 4x markup. You put in what other people are putting in. And until the stocks go up or then VC investments go up, nobody's saying, oh, it's worth 4x instantly because this guy's a good track record. A lot of people have good track records. And there's no need to pay up 4x book value for a fund. Banks trade at book value, and they have a license to print money. So I don't see the sense of paying for I guess, he's a successful guy, great. There's a million successful guys out there that are peddling, invest with me, I'll do it again. I'm one of them. But when I go to my investors, I don't tell them, I don't know, man. It'd be very weird to sell people on a blank check and say it's worth that much more than it's trading for. Like, it's normal at a small valuation, but as you get bigger, like when I went to investors, a year ago, and I said, I'm starting a new company, would you like to invest? They bought a portion of the company for some cash, and, that's normal. But as we get bigger, we have to have something to show them, some kind of progress, revenue, earnings, users, something, and then they could give us more money and more money and more money. But it's hard to just say, just give me capital, I've had a successful past, and value my business at $10 billion, I want you to invest $2 billion. People will say, well, wait a second. Your ideas are worth, this much? I don't know. Doesn't make sense to me. Michael Kimchi.
Hey.
What's up?
Sure, that's all I got.
Okay, hi guys. I have a question for O'Hare. So anecdotes are fine and dandy. Oh no, did he leave? No, he's here. Are fine and dandy, but GameStop starts and ends as a business. What do you see as GameStop's economic moat? Or are you simply waiting for a speculative mimetic catalyst from Ryan Cohen?
Look, I want to just address, before I answer your question, just what Martin was saying. Martin, all of this stuff you just said was a lot of word salad. Valuations are different for different sectors, different businesses. So, you're throwing in venture capital, you're throwing all these other disparate businesses.
Well, hold on, that's what it is. That's what it is. You're saying that he's going to turn the $2 billion into something. That's called venture capital. It's literally what it is.
Look, you keep muting. Look.
Yeah, I keep muting you because I need to answer you.
I just don't think you understand what's going on at GameStop.
How?
I don't think you've done a lot of work or a lot of modeling of any kind. So
there's nothing to model. It's just losses.
Listen, Mark, you're throwing darts. You're making up all these fucking. You love to talk, right? You love to talk and you love to hear yourself talk.
No. That's you, dude. That's you. That's you. You haven't said one coherent fucking thing. They have $2 billion in cash that they're praying to turn into something else. There's a business very similar to that called venture capital, but you don't just have to look at venture capital. You can look at any other business. Every business is trying to. It's the definition of business. They can't do it. If they do it, we'll worry about it then. So far, his one idea has been NFTs. So why should I give this guy credit that he's going to turn $2 billion into even something more than $2 billion? I think he's going to turn $2 billion into less than $2 billion because that's what he's done so far. Right? Cash flow from operations last year, negative $250. What are we going to get this year? Is it going to be up? I don't think so. I bet you it'll be down. Every business in America is trying to get an ROIC above their WACC. They have a cost of capital. Everybody's cost of capital is positive. 3%, 5%, 7%. And they're trying to get a return on a new business initiative. It could be Amgen, it could be Coca-Cola, it could be a fund, it could be anything. That is business in America. It's very simple, it's universal. You put your extra capital to work. If you can't find a high returning thing, you do a dividend or a buyback. That is business in America. Funds work the same way. Funds are saying to you, we can invest in a high return of capital, give us your money. Corporations are doing the same thing implicitly. That's why finance, principles of corporate finance in school, they're very related to investments. You can make investments from a corporation, you can make investments in a fund, sort of fundamentally the same thing. Internal or external, as some companies put it. They have $2 billion, they have to invest it in something. Last time they tried, it was a boondoggle, it was a fucking disaster. Usually, if a company makes a disaster, they're going to have a track record of more disasters. Maybe this is just a one-off disaster. But if you're asking me to grade this guy's brilliance on his moves, that was a bad move. Nobody thinks that was a good move. So what's the next move? We'll see. But at the moment, the business is atrophying, shrinking, shitty, and terrible. There's nothing good about it. They get the lowest revenue they've ever had in history. They're in a retail business, swimming upstream against digital distribution of their products. Nobody needs their core business. So they'll continue to shrink. Maybe they'll make money selling trading cards. I don't know. But like every other investor on Wall Street, I don't have to imagine and dream and pray. I can just look at every quarter. And last quarter they lost money. The holiday season, they shockingly found a way to lose money. Almost impossible, but they had negative $12 million in cash flow from operations in the holiday season. Amazing. It's just a train wreck. There's a million stocks out there at the same valuation that make money. You don't have to bet on the turnaround. You have cash flow. So to me, this is just one-on-one stuff. I'm not addicted to the stock because I have a prior, involvement in it. I think that, I haven't heard a single intelligent thing from that. You could say something pejorative, like, oh, you're saying word salad. I don't know. What part of it is word salad? That's $2 billion in cash they have. They need to make a return. They haven't made returns in the past. How are they going to make returns now? Is there a plan? There's nothing there.
So I have a quick way that so what they can do is they sell shares directly to the market, and they just use their big stock printer to print off more and more float. They sell that to everyone who wants to buy it, and they just report that as their revenue, and then they grow revenue.
That sounds like a game plan. Michael.
Because they have voters for them.
Michael.
Hey, yeah, I was just going to address, two of the main issues. One would be the NFT store, and I think part of that was that he was just trying to fund the space, to grow that space to later be able to use it, because, to be the central, it wouldn't make sense that each person, like X, have their own NFT store and whatnot as well. And it would just make sense. They wanted to bring money into the space so that the technology got advanced, but they wanted to keep it decentralized so that there wasn't as much room for regulatory scrutiny as far as, like, let's say they invest all this into the store and then you just have the SEC breathing down their neck the whole time. It wouldn't really make sense, but they do plan on using it. The other one is
Didn't work out.
As far as scaling,
It didn't work out, and there's 100 million NFT marketplaces. It'll take me and Ryan about a weekend to program one. And it's not a brand in Web3. NFTs are worthless, especially now. They've dropped 95% with the blue chip NFTs and 99% with the other ones. It was a fuck up. Let's be clear. This wasn't like some genius strategic move. This was a colossal fuck up.
I think they're going to use it in a different way. I think it'll be like an NFT receipt. So it'll be like a warranty. You know, say you want to trade it in, they know exactly when you bought it, right? Say there's a problem with it, they know exactly in the supply chain where that problem could have came. I don't think that it's just going to be pictures on a digital token, right? I think
you're huffing some opium. I mean, where's the business here? What value is this?
So I think that's what I'm getting to. I think they're changing their whole business strategy because they're scaling down their stores because that's not going to be their main business, right? They're just going to keep a few stores of the most strategic ones because what they're building is an omni-channel e-commerce platform that is likely going to be partnered with X, right? I mean, it's kind of like we're here talking on X, right? It's kind of the new thing. And, Elon has been working on getting a payment system, which could have already been in place, but New York and California have been dragging their feet trying to sabotage it. So once the X store comes in, if GameStop ends up being the ultimate destination for both the physical and the digital gaming things, then that would be a huge market instantly. And they have everything set up for that. One thing is a GameStop Player. So the game launcher through X, my thoughts will be from GameStop, and they'll be getting a portion of all the sales that go through that. And I think that's where the revenue is going to come. And so let's say that Elon announces, sometime this week, like, hey, payment systems are now active. Oh, we have this Shopify-powered store ready to go. And oh, guess what? GameStop is the ultimate destination for anything gaming related. Suddenly, you'd have a huge revenue source, and the NFTs could be used for shipping, right? Amazon doesn't actually make money on shipping, right? They actually lose money on shipping products. But leveraging Flexport, who Ryan Cohen is somewhat associated with, and Shopify and some other things, like they can make the logistics actually work out and actually have unit economics be profitable for shipping. And so that's what I'm waiting for. That's why I bought call options, a few months ago, and that's why I'm still in. Is I know that at any moment they could announce that the GameStop store on X is open, and that will just change everything.
Is there a reason they don't? Is there a reason they don't disclose their e-commerce revenue?
Oh, I don't know.
I think it's pretty low.
Oh, I'm sure it is right now, but I think the thing is that they've been kind of laying the groundwork for something really big, right? I don't think it's a coincidence that Javier Milei, the president of Argentina, met with Ryan Cohen and with Elon Musk, right? I think that they're going to have X be, once it has cryptocurrency, being able to be transferred in there, it'd be a lot easier to do e-commerce worldwide. And I think they're ready for it, and I think that's what X is planning on doing.
Well, that's a theory. Pluto, what do you think?
Hey, sorry. I think to add on to kind of Michael's point there, like GameStop's kind of uniquely positioned, right, in terms of the gaming industry. Like the gaming industry is like the biggest entertainment industry by like a factor of like 4 or 5, right? And one of the things you have to look at is sort of trends in the gaming industry, and things like the Steam marketplace Twitch drops, like Fortnite skins, like all
Yeah,
this
they
cosmetic
missed all
stuff.
of that stuff. They missed all of that stuff. They could have.
Right. But so the thing is, like the Steam marketplace, Steam gets a cut of every like trade going on. Like the things on the Steam marketplace are NFTs in everything but like name essentially, and like all these gaming companies are salivating over that, and they don't know how to implement it. And you know, if you look at kind of the history of GameStop, like they're not really a stranger to kind of doing things like retailer specific pre-order bonuses and like, you know, stuff like that. Like they have connections with all these companies who want to do this stuff. And like I think when you look at the NFT marketplace, was it a flop? Yes, but I think it's a toe dipping more so. Like if they can become some sort of like B2B vendor for kind of digital collectibles like that these companies want to do, they just don't know how. I think that could be quite a large revenue stream. And you can kind of see like the retail side is obviously, you know, dying, but I think there must be some sort of pivot coming.
Why would anybody partner with GameStop when there's already distribution channels elsewhere? Like, it's for X to partner with GameStop, that's a brand dilution. Like, that's a step down.
Yeah, I don't get it.
Energy there.
I don't get it either. But I think
I'm talking about like, you know, like Nintendo, for example. Like if they want to get their stuff out to people, like GameStop's like where normies go for stuff like that, right? And
not really.
I mean, they have some customers, obviously, but I think that, you know, you have a big headwind, which is retail is dying, and you have a desperate attempt to reinvent oneself, which is very hard to do. I mean, and the most important thing is the common sense stock investment perspective, which is why do I pay for a turnaround that hasn't happened yet, and the best case scenario is that all I get is what? You know, you're selling me a dream, and I don't want to. I can buy the dream for a cheap price, but I'm not paying a lot for a dream. You know, dreams are a dime a dozen. PP, what's up, man?